Hey Heather, how are you?
Hi, Tracy. I'm good. How are
How's
you?
it going? Do a quick
So good to
introduction
see
of
you.
yourself. So it's been a minute since we've recorded a video, so I don't want them to forget who we are.
Oh, yes. Been a minute. We've been enjoying ourselves and working hard. So here we are back
Yes.
again. I'm Heather Jones with eXp Realty, serving the Riverside County area, Inland Empire, and all surrounding areas in between.
Awesome. And I'm Tracie Schmidt with the Schmidt team at Supreme Lending. I live in San Diego, but I'm licensed throughout all of California. And now I think my team is up to, I think we're at like 38 states now. So yeah, if you have someone even relocating,
Fantastic.
definitely let me know. So we want
That's
to just
fantastic.
get right into it. We want
Yes,
to share
you
a
have
loan
some
program.
amazing news to share.
Yes. So for buyers, an amazing loan program, and for sellers, a way to get your houses off the market. There's a product now. It's called a 2-1 buy down that we're going to go over, where buyers, let's say in your area, right, with your median sales price, could save over $1,000 a month in their mortgage payments over the first year of the loan.
That is
So
amazing.
I know
That's
I can't wait to show you the math, and it's really simple, but kind of go through that a little bit. But I think it was really important, especially, with the market shifting a little bit, that we get that information out to your audience.
That's fantastic. Well, I can't wait to share. This way I can kind of share with all of my people out there. So just
Perfect.
go for it.
All right, so I'm going to share my screen really quick, and then when we're done, Heather will do the market update. So make sure you stay tuned for that, so inventory in the area, sales price average, if prices have gone down. That's always a big question that we get. So let me share my screen with you really quickly, and we could
Yeah,
go
we're
through
doing
this.
an example based on the median sales price in my area, right, Tracy?
Absolutely. Yeah. So I
Okay,
know we went
so
through that, and you said the median sales price. I mean, even you gave a comparison from April, it was about, what'd you say, about 765?
765,000 median sales price.
Okay.
And for July, yes, 716.
Okay. So we're going to use that example for the 716 for the median sales price in Corona right now as of last month. So this is called a 2-1 temporary interest rate buy down
We
program.
zoom in a little bit.
What'd you say?
Can we zoom in a little bit?
Yes, of course. Let me make
That
the
way
font.
our audience can see it too.
Let me make the font
Okay,
bigger. Is that better?
perfect.
Okay, cool. So when you're buying an owner-occupied property, if as a buyer you put 10% down, you could get a contribution from the seller of that property up to 6% of the sales price. Okay. Now, in this particular program, getting a seller contribution or a seller credit is what sometimes people hear the term of. That's specifically what we need in order for make this program work. So
Okay.
in an example, if we took 716 times 10% down, your loan amount would be 644,400. Okay, so that's what we would calculate the payment off of. 10% down of the sales price, and then you would take basically 6% for the contribution, which the seller could give up to $42,960. Okay, as a credit. So
Okay.
that's a lot of money. I mean, I don't know in this world if that's realistic. But the cool thing is, let's say, and we're going to show the example of how much money you need for this program. Let's say there's money left over. I mean, that could still cover additional closing costs for a buyer if the seller has that flexibility to give that credit.
Okay. And
Okay.
it's up to 6%. So they could give less if that's all that the buyer needed.
Exactly. So in this particular program, we have to give as much as needed, but you don't have to go over that amount if you want to try to help the buyer take advantage of this. And this is
Okay.
really the benefit is, as a seller, right, you're marketing your property to help bring more buyers in because you're helping them lower their monthly mortgage payment in year one and year two of their mortgage because interest rates have risen so quickly. Okay.
Yes.
So
Yes.
let's assume as of today, rate is 5.875%. That's with 0 points to the buyer. Assume you have a 780 credit score. The principal and interest payment would be $3,809.
Okay.
Okay. And principal and interest means, it's not including taxes, it's not including insurance or an HOA. We're just going apples to apples with what the principal and interest payment would be on that loan amount.
Okay.
Okay. So 2-1 buy down. So year one, the rate goes down by how much? Guess.
2%.
2%. Yes. So do you remember the days not so long ago when rates were 3.875%?
Oh, those were the glorious days.
So if buyers missed out on that, right, and they were waiting
Yeah.
to pull the trigger, and now that prices have dipped a little bit, the first year your rate would be 3.875%. It's 2% below current market. Okay. Your principal and interest payment would drop to $2736.31, which is $1,072.69 less per month than what you were supposed to pay.
$12,000 of savings in 1 year.
For the buyer, correct.
For the
Absolutely. Yep. Then you go into year two, and it's like, okay, Mr. Buyer, not only are you going to have all of that savings year one, year two, your rate will drop 1% from what it was locked in at current market. So in this instance, it would be 4.875%. The principal and interest payment you could see here, $3,079.46. And then how much savings is that per month, Heather?
$730 per month. So just over $8,700. So in 2 years, the buyers are saving just over $21,000. Now I know that money is coming from somewhere, but for a lot of these buyers, that's a huge opportunity to get into this market, right?
And the money is coming from somewhere. It's coming from that seller credit.
Yes.
Right. So even though the seller could give up to 6%, in this example, if you add those two numbers together and it's 21,632, that equates to about a 3% seller contribution, which would be allowed, right? Because you're putting 10% down. And it really gives the advantage to the buyer of having a lower, more affordable payment. Now, one of the caveats is you still have to qualify as a buyer at the 5.875. Right. At the higher payment, because after year two, the goal hopefully is rates are lower, please. And you could maybe refinance. But if that's not the case, you're still locked in at what current market was today.
So you would go back to the 5.875.
Exactly. So, yep. So we would have to make sure that you qualify for the 5.875 monthly payment total, because after year two, if you continue to keep that loan, we want to make sure obviously you could afford that payment.
Yes.
And what happens is that money, it's basically held from the seller, right, at the close of the transaction and put it to a separate account. So this way, the money is drawn each month on behalf of the buyer to go towards that portion of the payment that they were supposed to pay on their own.
Yeah.
That's basically how it works. Now it's also, it's available for fixed rate conventional loans, which is what this example is, FHA loans and VA loans. Okay. Ooh. Yeah. So there's an opportunity. It has to be, owner occupied, like we talked about. But there's definitely an opportunity for people to reduce their monthly payment.
That's great. And a lot can happen in 2 years. So like I'm talking to several people out there who are looking to purchase, and I keep telling them it's great because the competition of buying has gone significantly down because of the circumstances here. Yeah. But we have a lot less competition, a lot more opportunities to get into a home, and it's so much easier to refinance a property that you already own than wait for rates to go down again. Prices may go up, we don't know. But then you're just competing again with all those buyers who decided, nope, I'm going to wait for interest rates to go down again.
Yeah. And honestly, like with 10% down, right? Generally you have mortgage insurance. So, but you already have 10% equity in the property. So with the average appreciation in California, we've talked about this in the past. If you kept that loan for 2 years and our average appreciation, let's say, is like 6%, right? That's another
6.75 actually.
Yeah. And then like a normal market, right? That's 12% appreciation. You already put 10% down. You're paying down your mortgage balance. So you go to refinance. And if you qualify, potentially you'll be at 80% or lower and also get rid of that mortgage insurance if rates go down. So you're kind of playing the market a little bit, and thanks to the sellers, right? Because they're the ones that really have to be on board and want to contribute to this, because maybe their house is sitting on the market a little bit longer than they wanted. Maybe they need to do a really quick sell. And like you were saying, competition, it's like houses don't just go up and go down in a day anymore. So
correct.
And speaking of that, why don't you give some of the market information in your area, just so they can kind of gauge like prices, if they've dropped or gone up or...
Yeah, absolutely. So we are in the first week of August here. So these numbers are all based on when this video is filmed. And we have a lot more inventory here in Corona now. We are looking at 360 active or coming soon properties.
Wow.
So there's a lot to
I
choose
feel like
from.
that's a big number compared to even what?
Compared to even just 2 months ago.
Yeah.
Yeah, it's we have at least 100 to 120 more homes
Wow.
on the market.
Okay.
We have 189 homes currently in escrow.
Okay.
And the city of Corona has sold 143 homes in the last 30 days.
Wow.
So of those, real quick, let me do one quick calculation. So of those 143, 84 homes, one second here. Okay, so of the 143 homes, 60% are still selling at or above list price.
Okay.
It might not be, so only 40% sold under asking. So we're coming down now to where we're evening out here.
Yeah.
But that's still good news for sellers, that homes are still selling for what they want.
Yeah.
But then on the flip side, I think that's great news for buyers because prices have started to come down, making it a little bit more affordable for all of these buyers. I know in July, like we said, the median sale price was 716,000, but the median list price was 737,000. So
Got it.
about a $20,000 difference here.
And it's all averages, right? So, and that's what I try to tell people is each individual home and each individual situation is different.
Yes.
So every seller and every buyer, it's like, you know, and that's why you need a team like Heather and I. It's to understand your situation. You know, do you have to sell? Do you have to buy? Are you relocating? You know, are you growing your family? And then just try to figure out in the market kind of what's best for you. Have properties been sitting a little bit longer? Do we think we can go over asking and get a credit back? You have to have knowledge in this market right now to basically take advantage and get the best deal, in my opinion. So.
Absolutely. I can't agree with that more. And I think that it's so important as a buyer or a seller to educate yourself on who you're choosing to represent you because you want to make sure that these people are knowledgeable and that we as a team of realtors here, but when we're representing like my clients, I try to advise and get as much advice from my peers like Tracie and anybody else who's going to be involved so that I can put the absolute best strategy in place to get you to your goals. So that's ultimately what the goal is to get you to your goal and your goal outcome.
Yeah. And I don't want to scare people either. Like you don't have to have 10% down, right? That's just the scenario that we wanted to use based on that median sales price. But if your median sales price was a little bit lower, like if you found a house for 680, you could only put 5% down and still take advantage of this type of program to get money from the seller in order to, to offset your payment. So I can't wait to get this message out there. And so if you are interested at all in learning more about the 2-1 buy down or, obviously connecting with Heather, figuring out what is your home worth right now, right? Has it gone down or is it the same? What's the best way, Heather, for them to reach out to you?
So for potential sellers, go to home value for the number 4you.com. And that'll get sent directly to me and I'll put something together for you right away. For home buyers, just give me a call. My information will be here on the screen. Give me a call and I would love to do a buyer consultation. And I know Tracie does that too, whenever she has buyers, but we would love to kind of work with you as a team and see how we can help you and offer the best solution for you. This program is great. It might not be the best opportunity for you. That doesn't mean that Tracie doesn't have another program that will work for you. So
and I think the good thing is too, is that you're seeing new programs come out, right? The market is adjusting to what we're going through because, I was telling Heather, we've never seen an interest rate hike like this in the 25 years that I've been doing mortgages. It's never happened. So to know that our company is coming out with new products, adjustable rate mortgages are coming back. There's just so many things that we could still do. Jumbo investors are now allowing us to go lower loan amounts so we can use their products instead of like a Fannie Mae type of loan. So I think there's so much out there for people to still explore. So
Yeah, I think the most important thing is that you have the initial conversation because you
for
never know
sure.
what's gonna come up that would be a good fit.
Awesome. Well, it was so
So
great again to
thank you,
talk to you.
Tracy.
Happy Thursday, and
Happy
we'll
Thursday.
connect next week.
All right, sounds good.
Awesome.
Thank
Bye.
you. See you.